What's going on YouTube? Today I'm going to be showing you guys the Bollinger Bands, specifically what they are, what riding the band is, how to use them in trending markets, the Bollinger Band squeeze strategy, which is one of my favorite indicator strategies, and some common mistakes that a lot of beginners make when they first start using this indicator. And it's a really great indicator. It's very accurate. It's actually one of the most used indicators on Wall Street. So that just shows you how vital it is that you need to know how to use the Bollinger Bands. So first of all, what it is, you've got this middle line here, which is your 20 moving average of the stock. And then you've got your upper band up here, which is above the middle band. That's going to be 2 standard deviations away from the middle band above it. And then you've got your lower band down here, which is going to be 2 standard deviations below the middle band. And if you're wondering what a standard deviation is, it's nothing too complicated in terms of the stock market. It really just tells you if the stock is overbought or oversold at that specific moment in time. So for example, whenever the stock hits this upper band here, that's going to be considered overbought, overextended. And then whenever it hits this lower band or even goes below it, that's going to be considered oversold or oversold. So that's just the basic meaning of it. But as you can see here, this is one of the biggest mistakes that people make. They sell the stock just because it hits this band. But as I was talking about earlier, there's something called riding the band, which is where it just touches this upper band here and it just continues to ride up all the way, just constantly touching this upper band and pushing it further up. So just because it touches this upper band doesn't mean that you should sell it. You need more reasons than that just to sell it. So like, for example, maybe if the stock went up, hit it, and then got rejected and started to go down, you would sell it. But you don't want to sell it just because it's oversold. And the same thing down here. You don't want to buy it just because it's considered overbought. Like right here, it hits this lower band, and then it just continues to go down for a little while. So you don't want to buy or sell it just because the indicator is saying it's overbought or oversold. And then just another example here, it touches this upper band, pulls back. This is how you can use it in a trending market a lot of the times. So once this uptrend is established, kind of breaks this downtrend here. So you're going to want to buy it here, and then it pulls up all the way to this overbought side, the oversold or overbought band, pulls back. And then the way you use it in a trending market is you buy it when it touches this line and pulls back to it and then comes back. So as you can see right here, it pulls back all the way a little bit below and then closes all the way up here. That's a strong close. That's a great spot to buy. It goes up for a while, pulls back for a correction all the way to this middle line again. You'd want to buy it right here, and then it continues to go up, pulls back again right here to this line. And then as you can see, it holds the support, closes strong up here below this candle here and keeps going up. So that's how you want to use it in a trending market. Great strategy is to buy it whenever it hits that middle line and continues to keep that uptrend in motion. And then the main strategy that a lot of people use for the Bollinger Band is called the Bollinger Band squeeze. It's basically where you have a period of really low volatility. As you can see here, it's going up and down, and these bands are really wide. That just shows you how high the volatility is. And then once these bands start to squeeze, that shows you that the stock's really low in volatility right now. So it's a higher chance of the volatility increasing a lot. So a lot of times what you want to do is set up your resistance and support within these bands when they squeeze like this. So for example, you would want to buy it if it breaks above, sell it if it breaks below. So it doesn't quite break this band right here. You wouldn't want to buy right there, but as you can see, it rips all the way down way below. So if it were to break above up here, you would want to buy, but since it broke down after the squeeze, you would want to sell. So you would want to sell right around here when it breaks this lower band, and then ride that all the way down into this area here. Giving you guys another example over here. You've got another squeeze right here. So high volatility, and then you've got all these weeks where it's really tight price action, squeezes right here. And as you can see, we've got a resistance line there, support line here, and it just gets squeezed all the way in between here, breaks up in this week. So you're going to want to buy right here when it breaks above that line, and then it takes it all the way up from about 145 area all the way to the 190 area. So that's a great breakout off of that contracted price action there. So that's how you use the Bollinger Band squeeze strategy. You've got another one right here, a little bit of a squeeze, breaks above. As you can see, it's squeezing here. This is just a smaller one, but you can still do it if you really want to. If you want to take on some more risk, as you can see, it breaks above on this candle right here, rides up, pulls back to about this support line right here, and then rips all the way back up again. Starts riding the band, pulls up to this 20 moving average, and then rips right back up, and then eventually it sells off and starts riding the band the other way. So that's how you want to use the Bollinger Bands, how you can use them in the trend-in market, use the squeeze strategy, and yeah, hope you guys enjoyed this video. If you want to see anything else in the comments, let me know and I'll make a video on them, and have a good day.